This is Shelley Kraft coming to you live on SNN Live. We're at the Sprott Natural Resource Symposium in Vancouver 2014. With me is Rick Rule, Sprott US Holdings, Inc. It's a publicly traded company, SII, on the TSX. Ladies and gentlemen, Rick Rule. How are you, Rick?
Shelley, great to have you here with us.
It's wonderful to be here. Great companies I want to share with you. This is the cat's meow.
Well, it's only going to get better. We had a great legacy to build on. Agora had this conference for 15 years. This is our first year running the conference. We had a great foundation to build on. It's been here 15 years. It's a franchise that will improve.
Let me ask you a question, and I know I'm speaking on behalf of our audience, so tell the audience, what's going on? It seems like there's a greater buzz. It seems like the attitude's been uplifted. It's not dismal. It's not empty for sure. It's crowded. There was not an empty seat in the opening.
I'm delighted you asked me that question, Shelley. The last time we talked, I said that we had put in a bottom and that the market was recovering, that it was going to be a saucer-shaped recovery because we didn't have a cataclysmic sell-off. There were going to be higher highs and higher lows. There was going to be volatility, to be sure. And for once, I was right. I mean, we did put in a bottom.
Just once, is it?
Yeah. I mean, I worked 3 decades to be an overnight success. We're in a situation now where the market is recovering. Clearly, it's recovering. That doesn't mean that the bottom 2/3 of this market can't go to zero. It should. But the truth is that the better companies, the people who work hard, the better companies are uniformly up this year. And they're up, A, because they're oversold, but they're also up because they have lots of value to add. The second thing is that the resource thesis, which was totally discredited last year, is performing again this year. I mean, people have suddenly realized that 7 billion people on Earth want to do stuff like drive and eat, and that requires resources. Resource quotes are up, the underlying commodity prices are up, the producer margins are up, and the returns on successful exploration are up. We're past the bottom. The recovery is going to be long, sometimes painful, but we're in the upswing. The downswing's gone.
What does this mean? Many of our investors are in the micro-cap stock market. Talk to them. What does it mean to micro-cap companies?
Well, it means a lot of things. That's a broad question. People need to understand in the first instance that the micro-cap mining sector, taken as a whole, is a destroyer of capital in good markets and bad. And so investors need to understand that all of the performance in the sector, the real performance, comes from 5 or 10% of the companies. The entire sector, if you buy that from your broker will live up to his name. You'll get broker and broker and broker. But if you select companies well, the top 10% of the sector delivers so much wealth that it adds legitimacy and sometimes luster to a very, very, very dangerous sector. That's the disclaimer, the warning. This is a sector where the challenges for the best companies are behind them. It is worth noting that the TSXV has, in the last 3.5 years, fallen by 75%. That means that the market fell by half and then fell by half again. Now, while that has dispirited many investors, the logical mathematician, of whom there are very few, of course, will understand that a market that has fallen by 75% is simultaneously 75% more attractive and 75% less risky. It's difficult to understand that when the value of your holdings have fallen from $100,000 to $25,000 because you personalize the $75,000 and you don't give a damn about math. But people who forget math are consigned to failure. If their expectations are set by 3.5 years of failure, in the face of victory, to bail out after a 75% loss is the equivalent of snatching defeat from the jaws of victory. It's a very stupid thing to do, even though it's understandable.
Now, in retrospect, a lot of the weaker companies, the overvalued, underperforming companies, are no longer here. So obviously, stock prices may have fallen dramatically, stock listings have fallen dramatically, and in that transformation, it normally seems that it would leave the last man standing even stronger going forward. Is that a good postulate?
I agree with the concept. I don't think that the Darwinian process has run its course. In the 1992 decline, we were losing between 12 and 20 listings a week. And the consequence of that was very much as you described. When the 1993 market took up, the market melted up because there literally weren't enough silos to place money. That hasn't happened this time because the industry was so overfunded. Now, there are some good signs. One sign would be about 100 companies have left the mining business for the marijuana sector, which I think is a great thing here in Vancouver. You'll notice walking around that due diligence takes place on every street corner here at night. And it's nice to see the directors finally engaged in a business that they have direct exposure to and experience in.
It's a new form of seed capital.
Correct. That's wonderful. I love it. New form of seed capital. And in fact, I'm making light of the fact that the Darwinian process that one would have expected in an industry that fell 75% in price hasn't happened. Waiting for it to happen will deprive you of the gains that you can expect from knowledgeable operators, the Friedlands, the Lundins, the Ross Beatties. That train is leaving the station.
Now, your conference is really interesting from the standpoint that companies are interacting with a group of investors that are eager to find out new information, and they don't want to be kissed. They just want to have an honest story told. What was it that gave you the impetus to invite the select few of these companies to this conference?
Sprott's not in the conference business. We're in the investment business, and the entire marketing thrust of Sprott is consumer education. So for us, the conference is a service. If you're in the conference business, what you do is you get revenue from exhibitors. This is a conference where the attendees pay to come. So our loyalty is not to the exhibitor, but rather to the attendee. And the attendees have told us as an organization for 15 years that they consider the exhibitors to be content, not advertisers. The consequence of that is that in many conferences, the qualification to be an exhibitor is a check that cashes and a pulse, in that order. For us, understanding that our customers have come to view exhibitors as content too, in other words, that there's an implicit endorsement by the sponsor of the exhibitor, we turned down over 100 exhibitors in terms of their application to exhibit at this conference. The 45 exhibitors that we selected are exhibitors that either we own a lot of or other speakers own a lot of, and every keynote speaker here had an informal veto if he knew something about an exhibitor that would cause that exhibitor to potentially cause the franchise represented by the conference to lose value. And we'll do better next year. We have a sterling group of exhibitors this year, but having proven that we can make this conference a success, we'll be even more selective next year. We will improve this conference every year.
I won't say that's hard to do, that being a compliment to this year's conference, but we've interviewed several of the companies, and when I asked them this following question, why are you at Sprott? Well, why are you here, basically, is my question. I get this overwhelming smile comes out. They really love being a part and having been vetted by you and the group. What is it that you do that's so different from what other people do when deciding on who should come, who should not be invited, who wants to come, who do you turn down? I mean, that's really the crux of it.
Well, Shelley, you've known me for a long time, and I have a lot of faults, and one of them is that I'm intensely competitive. And if I'm going to run a conference, it's going to be the best conference I can run. I don't mean bad things to other conference promoters, all of whom are my friends and all of whom I work for, but I'm going to beat them. You know, they're going to do pretty good, and I'm going to do better. That's the way it's going to work. That's the first thing. The second thing is,
oh yeah,
this conference doesn't belong to me. This conference belongs to the attendees. I didn't.
That's really well said.
Well, it's true. I didn't want to take on this conference. I wanted Agora to take it on and me to be a hired gun. We have an informal group of advisors among our clients who told me in February, politely, we consider this conference to be a substantial benefit of being a Sprott client, and we would appreciate it if you would take this conference on. That was a very polite way of saying, you know, get it in gear, Rick, make it work. If very nice, very important, and very smart clients suggest to you that they have a preference, that's a very polite way of ordering you to do something. And so my response was, sir, yes, sir.
Now, I do want to ask you a ton more questions, but I don't think you have time and we don't.
Okay.
Next time, I want to go into more about Sprott Global and Sprott US Global. Do you want to give me one little soundbite on that?
I'm happy to. I think the Sprott Group represents the best franchise in microcap natural resource speculation in the world. We manage $7 billion. We have about $1 billion on call, and we administer about $2 billion. We think that we're the largest focused investment firm in the sector in the world. That isn't to say that BlackRock and Fidelity don't have more assets in the sector, but it's drowned in terms of what they do. We represent a lot of money in the sector, and it is all that we do, all day, every day. And we historically have done it very well. We have not done it very well the last 2 years because we're in an industry that's declined by 75% in price. Despite that, we're a business that has $325 million in working capital with no debt, and we generate about $40 million a year in free cash flow at the bottom of a market cycle. I will let your listeners determine whether or not they think that represents good value.
To find more information about what you're doing, what website would you like to send them to?
I would love it if people came to check us out at www.sprottglobal.com. I would particularly ask your people to look at all the information and educational products there. We have, as an example, about 50 hours of programming called the Mining Investment College that we put in place with the Colorado School of Mines. Originally sold it for $1,000 a course in 1996. It's yours for free at Sprott Global. And for free, you'll get your money's worth, Shelley.
You know, Rick, there's one other thing I want to ask you. I know time is evaporating. Sprott Thoughts, what's that, and what do you recommend about that?
Well, we had mentioned that the core of Sprott's marketing effort is consumer education. Sprott's Thoughts is a free, 3-time-a-week blog that comes from all the best minds at Sprott and anybody else's mind who we can pick for free. It's distributed. It's about between 600 and 700 words, 3 times a week. You can go to www.sprottglobal.com and click on subscribe, and it's yours absolutely for free. If you care about natural resources, it's the best minds that Sprott, that is employed by Sprott, and the best minds that we can pick from the industry.
So great minds talking about mines.
Boy, that's a good turn of phrase. Yeah.
I gave you a tagline. Ladies and gentlemen, Rick Rule, Sprott US Holdings, Inc. It's a publicly traded company, SII on the TSX. I'm Shelley Crabb. This is SNN Live, and we are at the Sprott Natural Resource Symposium, Vancouver, 2014. Rick, thanks so much for coming on.
Always a pleasure, Shelley. Thank you.
Good to have you.